Peace talks in Ukraine, a potential opportunity for investors? Let's have a look. In the beginning, don't get me wrong, for the long-term security for Europe and also Ukraine, of course, it's very important how this current war ends. But for financial markets, probably any ceasefire would be seen as a short-term positive event. For global markets, we would not expect much impact because the shock for global markets has already passed in 2022. Since we get enough natural gas in Europe also without Russia, it's not a topic for global or even European equity markets. Just look at the DAX at all-time highs. But where you saw and still see the effect of the war is, of course, in the neighbor countries. Look at the chart what I mean. You see here the upper line, that's the valuation level of the global equity market dominated by the US. So when the line is high, you pay a lot for the current earnings that the companies actually profit, price-earnings ratios. The lower line is the same price-earnings ratio, the valuation level for equity markets in Central and Eastern Europe, the European Union neighbor countries around Ukraine. You see two things. Of course, the valuation of Central and Eastern European equity markets has always been lower than in the US. We don't have the strong growth companies there, but look closer, the valuation, the lower line of those Eastern European equity markets has dropped significantly with the invasion of Russia and Ukraine. Naturally, because that's neighboring countries. If we look close, the average valuation for those markets was roughly around 12 in the years before. Since the invasion, it has dropped to around 8, where we currently still are, which means those markets would have to rise 50% just to catch up to the normal valuation levels before the war in Ukraine. Of course, no guarantee that this gap closes fast and the market jumps 50%. But if you're interested in cheaply valued equity markets, and actually those markets also have a quite good growth outlook, then this might be something for you, especially, of course, if a truce in Ukraine materializes. Interestingly enough, the opportunities in Eastern Europe may not only be on the equity market side, but also on the bond side. If you look at government bonds in the region, the yield levels, the interest rate levels are still very high because inflation there has shot up much more than in Western Europe, coming down now. Interest rates of the central banks have gone up much more, coming down now. But we have here an example of, for instance, the yield level of Polish government bonds. 10-year maturity, long-term government bonds, and they are still at a level of roughly 6% interest rate, which has come down from the highest, don't get me wrong, but it's just an example for the region. You have it in other markets there as well. Still relatively high, attractive yield levels. Of course, with the risk that you have to invest in the local currency to get those yields. So you have the full currency risk, fluctuations versus the euro. But if you do this with a basket of currencies and you have a good currency management, then we think those markets might be worth a look because, again, you get those high yield levels, not for junk bonds, but for government bonds of European Union countries. So also the bond side may be worth a look as part of a broader bond portfolio. So that's it, a brief video this time. Maybe for this reason, a look back to last month's video. Remember, we had as topic the trade war with Mr. Trump, and the idea was, well, there will be more escalation in the trade war, of course. Markets will probably react negatively in the short term, of course. This has happened already. Now we, of course, hope, and we still are convinced, that's why I want to mention it, we still think that when equity markets come down too much, Mr. Trump gets cold feet, retracts a little bit from his trade war, and then markets start to recover again. So we keep the fingers crossed that the second part of last month's video also materializes. Insofar, don't forget to subscribe, to like, to not miss the next part, and wish us all good luck and see you next time.